There is a number sitting in your bank account right now, and it is smaller than it should be. Not because you spent more than you planned, not because something went wrong, but because your bank has been quietly, methodically, and completely legally taking money from you. And they have been counting on the fact that you will never sit down and actually look. Welcome back to Vertex Wealth Australia, the channel that pulls back the curtain on the financial system and shows you exactly how it works, because knowledge is the only thing standing between you and a system designed to profit from your inattention. If you are new here, subscribe now, because what we talk about on this channel will genuinely change how you think about your money. Let's get into it. Banks are not your friends. I know that sounds harsh, and I'm not saying the person at your local branch is out to get you personally, but the institution, the boardroom, the product designers who sit down and engineer your account from the ground up, they have one job, and that job is to extract as much revenue from you as possible while keeping you just satisfied enough that you do not leave. And the single most powerful tool they have in doing that is your own passivity. There is actually internal language used across the financial services industry, and I have seen it referenced in product strategy documents and banking analyst reports around what they call low engagement customers. That is you if you are the type of person who gets paid, watches the number go up, pays your bills, and does not look too closely at what happens in between. Low engagement customers are, from the bank's perspective, the most profitable segment they have. Not the high net worth clients, not the business accounts. You, the person who does not check. So let's talk about exactly how the money leaves, because it does not go in one dramatic withdrawal. It bleeds, slowly, in small amounts, across multiple lines, in ways that are individually easy to dismiss and collectively devastating. Start with account-keeping fees. Plenty of Australians are still paying monthly fees just to have a transaction account. $5 here, $8 there. That is up to $96 a year just to exist as a customer. Most people know this fee exists in theory and have never once looked at whether they are still paying it, whether they qualify for a waiver, or whether a genuinely free alternative is sitting right there available to them. The banks know this. They budget for the percentage of customers who will never switch. They call it churn modeling. You are a number in a spreadsheet, and that number represents the probability that you will keep paying them to do nothing. Then there are the ATM fees. Now, I know what you are thinking. I use my bank's ATM, so this does not apply to me. Except when you are traveling, running late, parked outside a venue, or in a situation where your bank's machine is not nearby. That $2.50 fee per transaction does not feel like much in the moment, but the Reserve Bank of Australia's own data has shown that Australians collectively pay tens of millions of dollars in ATM fees every year. Tens of millions. For the privilege of accessing their own money. Let's talk about overdraft. This one is particularly ruthless because it targets people at their most financially vulnerable moment. You go a few dollars into the negative, maybe a direct debit hit a day before your pay came in, and suddenly you are being charged a fee for that. Some accounts charge a flat dishonor fee. Some charge daily fees for every day you remain overdrawn. Some charge both. And here is the thing. You almost certainly agreed to this somewhere in a terms and conditions document that was 40 pages long and written in a font size designed for people who do not need reading glasses. The fee is legal, the disclosure was made, and the bank knows that the people most likely to go into overdraft are the people least likely to be monitoring their account closely enough to catch it before it costs them. Foreign transaction fees are another one. Every time you spend in a foreign currency, whether you are overseas, shopping on an international website, or subscribing to a service priced in US dollars, most standard bank cards clip you between 2 and 3%. You bought something for $50 US. You were charged $2.50 you did not know about. That subscription you have had for 2 years has been quietly costing you an extra $60 annually on top of the advertised price. Multiply that across multiple subscriptions, and you start to see how this stacks up. Now here is where it gets really interesting. And by interesting, I mean genuinely maddening when you understand it fully. The savings account rate gap. Your bank is borrowing money from you. That is what a savings account is. You deposit money, they lend it out at mortgage rates, credit card rates, personal loan rates, and they pay you interest for the privilege of using your cash. The official cash rate in Australia has moved significantly over the last few years. Mortgage holders felt every single movement almost immediately. But savings rates? Banks have historically been far slower to pass rate rises onto depositors than onto borrowers. The gap between what they charge borrowers and what they pay savers is called the net interest margin, and Australian banks have some of the most comfortable net interest margins in the developed world. You are the low-cost funding source they are not in a hurry to make more expensive. And then there is loyalty pricing, which is perhaps the most cynical mechanism of all. New customers frequently get better rates, lower fees, and better terms than existing ones. The bank spends money acquiring new customers with attractive offers and then quietly lets those terms erode over time, literally banking, on the fact that switching feels like too much effort. They have calculated the friction. They know how many people think about switching and never do. Inertia is a revenue stream. So what do you actually do about this? Because this channel is not here to make you feel powerless. It is here to make you dangerous to the institutions that profit from your ignorance. First, block out 30 minutes this week, not this month, this week, and go through every single fee on your statements for the last 3 months. Write them down. Total them. That number will motivate you faster than anything I can say. Second, call your bank. Seriously. Ask them to waive fees. Ask whether you qualify for a fee-free account. Banks have retention budgets. They would rather waive a fee than lose you. Most people never ask. The ones who ask are often surprised. Third, compare. The Australian government's Money Smart website exists specifically for this. High-interest savings accounts, genuinely fee-free transaction accounts, low foreign transaction fee cards. They exist, they are from regulated institutions, and in many cases, the switching process takes less than a week. Fourth, automate your awareness. Set up balance alerts. Set a weekly calendar reminder to glance at your transactions. You do not need to be an accountant. You just need to not be invisible to yourself. The banks have built an entire profit model around the assumption that you are busy, distracted, and mildly uncomfortable with financial admin. Prove them wrong. This is Vertex Wealth Australia, and our entire purpose is to hand you the information that shifts the power dynamic back in your direction. If this video opened your eyes, share it with someone who needs to hear it. A friend, a partner, a parent who has been with the same bank for 30 years and never once questioned the fees. Subscribe if you are not already with us, hit the notification bell so you do not miss what is coming next, and drop a comment below telling me the most ridiculous fee you have ever been charged. I read every single one. Until next time, stay sharp, stay skeptical, and keep more of what you earn.